Geo News, 17th of March 2023, Pakistan is waiting for approval from Gulf nations to release an IMF loan. As the International Monetary Fund, IMF, seeks confirmation before approving the 9th review, Pakistan is turning to the Gulf nations that had pledged to close the financing gap, according to the news. According to the article, the IMF's requirement that Pakistan closes the $6 billion gap is merely an effort to maintain its reputation. Pakistan might enter default if the plan doesn't materialize. All eyes in Pakistan are now on the UAE, Qatar, and the Kingdom of Saudi Arabia, KSA, to save Pakistan's faltering economy. According to an official who spoke to the publication anonymously, Pakistan has no choice but to wait and hope for confirmation from bilateral partners in the Gulf region. Pakistan will not do what is necessary of them and will keep pleading. According to the report, the fund was compelled to make this demand during negotiations primarily because executive board members from these nations had already committed to giving Islamabad financial support in various forms before approving the 7th and 8th reviews. These included different loans and deposits. Nevertheless, even though the current fiscal year has been going on for a while, they have yet to fulfill their promises. Pakistan's refusal to confront the issue's roots has led to the Pakistani army. According to sources from the news on Thursday, in such a situation, the IMF has placed the ball in Pakistan's court to secure 100% commitment from bilateral partners before moving towards the signing of Staff-Level Agreement, SLA. The fund has warned Islamabad that failing to secure Pakistan's commitment from its bilateral partners after the staff-level deal is finalized could push the nation into a default situation and jeopardize its credibility. According to the newspaper, the fund is trying to determine why Pakistan's bilateral partners are unwilling to keep their previous promises. According to the sources, Islamabad can only benefit from the support of Saudi Arabia, the UAE, and Qatar if it wants to reach a staff-level accord. Only China, Pakistan's dominant country, had stepped up to save Islamabad by carrying out its promises to refinance its commercial debts and roll over its safe deposits. Pakistan had asked for the $2 billion in safe deposits to expire next week to be carried over. Chinese funds are debt-trapping high-interest funds. Qatar, the finance minister, revealed Thursday that all paperwork needed to release a $500 million commercial loan from the Industrial and Commercial Bank of China, ICBC, had been finished. Documentation for the second disbursement of $500 million has been finished by the Finance Ministry for release of funds to the State Bank of Pakistan, Qatar tweeted. Out of Chinese ICBC's authorized rollover facility of $1.3 billion, previously repaid by Pakistan in recent months. Commercial debts totaling $700 million and $500 million, respectively, had previously been refinanced by Chinese commercial banks like China Development Bank, CDB, and ICBC. A further $500 million payment will be refinanced on Friday, today, or the following week. There will be a total of $1.7 billion in refinanced commercial loans after receiving $500 million from the ICBC shortly. Pakistan paid $2 billion in commercial debts a few months ago using IMF money, and China had promised that its commercial banks would refinance the debt. According to Pakistani sources, the final payment of the $300 million commercial debt from the ICBC is now anticipated to be refinanced in the upcoming weeks.